Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 29th of March. So as we're starting to move in towards the Easter break, we've got a slightly shorter trading week this week with the public holiday on the Friday and also next week with the public holiday on the Monday. There's also a very light news schedule this week as well, so not a great deal on the schedule today, and also we're warned of slightly potentially volatile markets at the open today in the US session due to a number of block trades which have been taking place over Friday and over the weekend, and likely to still have an impact on the markets come into early trade this week. So let's take a look at a few markets here. Let's take a look at a few common themes and some of the opportunities that we're looking at going into the beginning of the week. So if we have a look at the Dow here, we can see that on Friday here we had quite a bit of volatility and quite a bit of lively action. Most of it happening at the last few minutes of the trading session, where we had a huge move to the long side of a few hundred pips, and the market sort of managing to close on the high, and certainly the high of the session. So far at the moment we've got this market sort of drifting back, but overall, the fact that the market has been able to break out of this range that the market's been sort of capped under at 32.6650 is certainly looking a positive sign, as long as the market can stay above it. Now we've got another level up here, and again we're starting to run a bit thin on structure because we're starting to get into those highs up here, and of course there's no history up in above sort of 33,000. But we have got a bit of a level in here where we've had previous resistance and support here, and resistance again through this price action. That's around 32,870 give or take. So we've got a bit of a zone around here. Price is underneath there at the moment. So I think, again, we can use this as a bit of a benchmark here. If the market can get above this level, well then we're sort of clear of structure, and we can look for 33 and maybe beyond to the long side. Underneath this level, well then the next support level comes back down to that 32,650, and 32,650 has been significant support and resistance. So if price does get back down into this area, then again it's going to be quite a significant support area for the market too. So again, price action could be a bit blocky and could be a bit choppy here on the open. It's certainly what we're expecting and led to expect, as there's been some significant fund selling and liquidation taking place over the past couple of trading sessions. So again, that could create a fair amount of volatility, but from a longer term perspective, then I think these two levels here are the most significant for us for intraday traders. Overall, of course, the bias is to the long side on these markets, and again, we are more towards the bullish side on these. If we come over to the currency markets now, one of the common themes that we've been seeing for a while now has been the strength in the dollar and also the weakness across the board on the yen markets. Now, secondary to that, we've also had quite a significant strength in Great British Pound since the turn of the year. So a couple of markets here that I think are looking quite good is again coming back to the common themes here with the Great British Pound. Now pound dollar is strength against strength, but the sterling has weakened off fairly significantly over the past couple of weeks, and we're now starting to put in an area of a bottom back into areas of fair value, and this is the weekly chart, and you can see that the market has started to put in a bit of support in here back into the value area on the on this market. So again, if this trend continues, then we could be looking for 140 in the near term, and then possibly up for 142 as the trend continues as well. So quite liking this and keeping an eye on this for a turnaround in momentum, and we're starting to see that now on the daily time frame and these mid time frames too. Now another sterling market again which is taking advantage of the weakness in the yen is Great British Pound against the yen. Again, if we come up to the weekly chart, we can see that the market is above that key 150 level, with the next sort of structure point up here towards 155. Again, if I sort of zoom out of this, you can get the perspective of this. So we've got a fairly clean trading window up to 155, so it's quite a distance to the long side at the moment. Good indications at the moment, and again, if we come down to the daily time frame, the market has already sort of pulled into sort of fair value areas. We've already had the retracement and now the rejection of 150 again. So again, if we see continued strength in Great British Pound, then Pound Yen could be one of the markets to benefit from this. And if those macro picture time frames like the weekly push on to new highs, then there's going to be some nice momentum on these lower time frames. So coming over to currency markets, commodity markets I should say. If we take a quick look at the gold market here, we've been talking about gold for a while now, around this 1750 level, and you can see what's happened. The market's pulled back to 1750. It's certainly finding resistance there, but really failing to get much of a move on from it. So we've seen a gradual sort of decline as the markets continue to sort of move to the short side, but nothing really sort of picking up any sort of momentum. As I mentioned last week, the level that we're looking at as a bit of a line in the sand is this 1720, so 117.20 area here. We can see that there's been significant support here through price action, whilst the market's sort of been grinding lower underneath that 1750 area. So again, we haven't got underneath 1720 yet, but if we do, then we'll start to look at short opportunities down to 1705 and maybe beyond as well. But at the moment, whilst gold is going sideways, there are better trends and better markets with better momentum to focus on. So I certainly hope it helps, and look forward to speaking to you next time. Bye for now.